Hello and welcome to Money Life. This is Sucheta Dalal. This week I'm going to talk about the PMC Bank again, but with a little wider perspective. A sustained campaign by the depositors of Punjab and Maharashtra Cooperative Bank has managed to keep the issue in the headlines. They have been protesting all over the place, some of them have got detained, but they are at it. These protests and some of the very sad deaths have led to a wider discussion on whether this can go on. Can people keep losing their savings which are safely kept in a bank? The obvious answer is no. But will we have reforms that make sure that people are warned and their money is safe? Well, past experience shows that that's not really likely. So it plays to a simple playbook. It is like a game of wits. What happens is depositors protest, there's a lot of public anger, the story is on the front page every day. That's the time the government and the RBI react by setting up committees, making a few arrests, putting out newspaper stories about how money is being recovered. Then slowly the depositors and their protest lose steam. In this case, more and more people have got money. So after people have got 40,000, nearly 76% of the depositors are out of the picture. After that, the recourse is a long legal battle, sometimes expensive, and people just go back to their daily lives and rebuilding their savings, and that's when the momentum is lost. This always works for the Reserve Bank of India because it can afford to wait, and people can't afford to keep taking to the streets to protest. So even this time, the discussions may not lead to anything much. If we want them to lead to action, we will have to join and keep up sustained pressure and momentum in multiple ways. And this can't be done by people who have lost their money alone. They need support. And we, the people, need the change. So you may not have money in PMC Bank, but remember, you're affected because something else may affect you. Now let's look at where we are going. Everybody seems to suggest that you need to have higher deposit insurance. Today it's 1 lakh. Everything moves to a pattern. So the last time it was raised from 30,000 rupees of per depositor being insured to 1 lakh was when you had the security scam of 1992. Yes, believe it or not, after that it has remained static at the same 1 lakh. Over the years, people have made all kinds of demands. Obviously, depositors say there should be 100% insurance. There cannot be 100% guarantee, because that comes at a huge cost. Some others have said it should be 5 lakhs. Some people have done calculations and said it should be 2 lakhs. So the consensus is that it should be raised. But my point is that when the system itself is so completely flawed, it is no wonder that the RBI sets up committees, discusses things, talks about risk-based premium, and then goes back to doing nothing. This nothing is what worries me, because in India, people who have lost money in badly regulated, unregulated schemes have never got their money back. You look at the Sharda scam, which was like a quasi-chit fund with higher returns, people got 10,000 rupees. 32 people or more died, committed suicide, lost their lives because they were heartbroken. Go back even further. In the 90s, the rage was plantation companies. Even there, hardly any money has come back. Money Life keeps writing about these. Even people who have lost their money through unsecured fixed deposits. We ran a campaign, did a memorandum, nothing happened. So our point is, whether it's Ponzi schemes like Hira Gold or what have you, PACL, 49,000 crores, the process is so slow and deadening. We can't have that when we invest in what we think are safe banks. You can sneer about people investing in a cooperative bank, but believe me, I don't see why these should not be safe too, where the government is asking you to put money there. So let me look at what is happening. Let's not get pessimistic, but remember, the initial burst of action leads to nothing. Okay? As a category, there is a bigger problem. Now, if you look at the structure of banking in India, there are over 2,000 banks, and believe it or not, 101 are the large nationalized banks. They have lots of branches, so it looks like they are bigger in number, but they are not. They are 101. The largest chunk is cooperative banks, 1900 plus. And this is after 500 odd banks have closed down in the last 10 years. Cooperative banks fail at the rate of one every month, maybe more. These statistics are put up on the RBI subsidiary Deposit Insurance and Credit Guarantee Corporation. It is in the public domain. For the last 10 years, we warned people, do not put your money in cooperative banks because they fail. And only 1 lakh is insured. Invariably, people lose a chunk of their savings. Now, in the last year, about 12 banks had settlements. If you look at the DGCI figures, what you will see is the Deposit Guarantee Corporation didn't have to pay anything. There was enough liquidity to pay something back. But that something is probably below 1 lakh, and I don't think people got their money. Even as we speak, there are 4 or 5 banks where people have lost a lot of money. So the simple solution which people ask for, why isn't PMC Bank being bailed out, cannot be done because there are nearly 2,000 more standing in queue, many of which are already in a position where they need a bailout. So all those depositors are going to go to court, and no amount of deposit insurance is going to cover all the deposits of all these people. So you have to look elsewhere. The solution is better supervision. Now, we have put up on the screen below a table. What does it show? That all the money for deposit insurance comes largely from these nationalized banks. All the payments are made on account of failed cooperative banks. Clearly, it's unsustainable. But there are flaws even in the argument and the belief that nationalized banks are perfect, they're safe. In fact, they are safe only because they're Sarkari, which means that there is an implicit sovereign guarantee, and that is what has kept them afloat. So my point is that the entire structure of deposit insurance in India is completely flawed, and if we were to really insure banks the way they ought to be insured, then our premiums would go sky high. Before I come to why deposit insurance fails, let's look at what happens with these cooperative banks. Like I said, nearly 2,000 of them. When they fail, the RBI appoints an administrator. The administrator then takes charge and looks at what is owed, what happened to the money. This process goes on sometimes for 6 to 7 years, sometimes 10 years. Yes, as long as that. And in the meanwhile, what happens to the bank? I like to say that it turns into a zombie because it's not allowed to do banking operations. All it can do is recover the money. It has a staff, keeps functioning, it's paying out salaries. Where does this money come from? From the deposits that are virtually impounded. So there are some banks where the RBI has still allowed only 1,000 rupees to be withdrawn. That's how it started with PMC Bank. It has slowly gone up to 40,000. So in a sense, PMC Bank depositors are lucky. Others are still sitting with 1,000. So the administrator gets paid a salary, staff is paid a salary, they're sucking up the deposits like a zombie, which means it's not alive, but it's not dead either. It takes a whole process for liquidation to happen, and then whatever is recovered is distributed among creditors and depositors. It's a slow process, it's a slow death, and whatever deposit insurance is paid at the end of this long drawn process. So if you have all your savings in a cooperative bank, you just have to wait because the system doesn't care. There are too many of them and too many failing. Okay. Now let's come to deposit insurance and see what's happening over there. Is deposit insurance the solution? Well, if you want to look at it as a solution, then you cannot look at it in isolation as an umbrella collection, but you have to look at the structure of banking. So the largest chunk of Indian banking is public sector banks. They account for 70% of all deposits in terms of value. Okay? These banks never fail. Why? Because they're Sarkari, not because they're doing well. In fact, even when their net worth is eroded, nothing happens. They carry on with business as usual. They collect further FDs, they make payments. There is no difference because from time to time, the government is bailing them out. They run up the biggest chunk of bad loans. And believe it or not, you and I, including the man on the street who's so poor that he doesn't have a bank account, is actually paying to keep public sector banks alive because it is paid out straight from the exchequer. You may remember that in 2017, former Finance Minister Arun Jaitley announced a 2.1 lakh crore bailout for public sector banks. This was going to be done in stages over 2 years, and money has been released. In fact, as recently as August this year, the Finance Minister Nirmala Sitharaman has announced a quick release of 70,000 crore to keep public sector banks alive. So when we look at deposit insurance, we have this myth that money is collected from them. It is small sums and it goes out while nothing is paid for them. That's because the country is paying for the bad loans and losses and recapitalization of public sector banks. Now, how much is collected is a huge amount. But before we go into that, let us look at what happens to private banks. Private banks in India have been small. After bank nationalization, only residual small number have remained. These banks after 1992 have found a new market because there are some large private banks like HDFC Bank, ICICI, which have done extremely well, and they're always in the market to acquire other banks that are available. So they have taken up not only newly licensed banks, but they have bought a whole lot of smaller scheduled commercial banks. So private banks by and large have not been an issue. Even the smaller ones find ready takers, and the bigger ones, as we have shown after the 2001 Ketan Parikh scam, was force merged with a public sector bank. So it's a principle of too big to fail. All over the world, people have realized, especially after the 2008 crisis, that letting big banks fail causes more damage to the system. And so there is a kind of safety. There is also an international move to find a way to get depositors to bail in these private banks. We're not going to get into this. If there is an issue with a large private bank, and believe it or not, there could have been an issue recently with Yes Bank. It seems to have turned the corner. There would have been no takers, and then the whole deposit insurance issue would have been questioned again. Then whether it is 1 lakh or double to 2 lakhs or 5 lakhs would have been inconsequential as compared to the losses. So the problem still needs to be fixed. Now let's look at cooperative banks. There have been a couple of flashpoints. The big one was in 2001 when the Ketan Parikh scam happened. Madhapura Mercantile Cooperative Bank went under. Over 385 crore was paid out by the Reserve Bank of India subsidiary as deposit insurance at that time. In its latest annual report, the Deposit Insurance Corporation says that is the time it took a big blow and it had to increase the premium. So one blow, just a payment of 413, I have a chart here, 413 crore, and immediately the deposit insurance premium was increased. Now look at how much of money is collected as premium. It is over 11,000 crore. Again, I have a table here. 11,000 crore collected. In the entire lifetime since deposit insurance was introduced, the payout against insurance has been only 5,000 crore. Why does the system seem to work? Because two large chunks of the industry are not dipping into this pool at all. So private banks in the last 25 years have not dipped into this pool of insurance, and public sector banks, despite their huge losses and failures because of the sovereign guarantee, haven't dipped into the pool. So over a period of time, more and more money has been collected as deposit insurance. It's over 80,000 crore. Fat taxes are being paid. There is no payout. I don't understand the point of this if the cover is only meant for cooperative banks, which have actually no business to exist. In fact, they've outlived their utility. Yes, they've reached the last mile, but they cannot be allowed to continue like this. In fact, the surprise is not only are cooperative banks politically controlled, but their capital is usually so small that if their primary credit societies, which have 1 lakh collected, they automatically become a bank, and they then have to apply for a banking license because their capital is 1 lakh. So you have undercapitalized banks that exist. Their number is huge. Some unlicensed ones have continued because they haven't bothered to get an RBI license while they kept raising money. Because they are under dual regulation, registrar of cooperatives as well as RBI, nobody bothered. Some of them have had their net worth completely eroded. They exist. Is it a worry? Yes. From the 90s, there have been committees to look at it. In fact, even in 78, there was a committee to look at it. Nothing happened. In fact, this NDA government, led by the BJP, in 2014, did something astonishing. It provided a bailout for the first time ever, even for unlicensed banks. And it wasn't a small amount. It was over 2,000 crore from the exchequer. Our money going into this. But we will not fix the problem. Why don't we fix the problem? Because there is a vested interest. Politicians want cooperative banks alive. Politicians watch how long you whine, how long you complain. When the protests die out, because you cannot sustain a court case that goes on, committees are set up, people are arrested, nothing happens. So you stop protesting, it's back to business as usual, it's back to completely lopsided deposit insurance, and there is no solution. Who escapes in all this? Not only the politicians who misuse your funds in most cooperative banks. I keep saying that PMC Bank is the only one where there's a large corporate house that has misused it, which is HDIL. Usually it is politicians. The Reserve Bank of India officers, in fact one of them has moved from RBI's Urban Banks Department, he was in charge of inspection, to become literally the number 2 in PMC Bank. Now, these people escape scrutiny as well. Nobody is asking them what they're doing. Nobody looks into whether they have a vested interest or not. Surely this cannot go on. Let us not lose this crisis. Let us ensure that it's not about PMC Bank alone. It is about all of us and our bank deposits. Yes, some of us are smart. We put our money in nationalized banks or large private banks. Does it mean we are not paying? When there's a budgetary provision made, which is huge, 2 lakh crore, 70,000 crore. That is our money that is going into these banks. So let's not sneer. Let's not say PMC Bank doesn't affect us. Let's join in and ensure that these protests lead to a long-term solution, that is increased accountability on the part of RBI and a proper solution to deposit insurance. In fact, there are 4 points that I need to make about what is it that we are looking for and how we want this to end, and I think I'm going to read that out. First of all, what is it that we want the RBI to do? We want the RBI to force all cooperative banks, 1900 of them, to convert into small finance banks or scheduled banks. They don't want to do it because they lose their flexibility. We don't care. They have outlived their utility. Today with technology, you don't need these small banks, underfunded, undercapitalized, to reach out to the smallest people. Let them become full-fledged regulated banks under RBI's supervision alone, and let RBI alone be accountable. We also want RBI inspectors and supervisors to be personally accountable. Let's put out in the public domain. We already have a huge battle for RTI. We have ensured some inspection reports are out in the public domain. If there is a problem, let's bring out those inspection reports. Let's find out who signed them off and whether they have any continued connections with the banks that they're regulating. I personally know of at least 2 instances. One of Punjab and Maharashtra Cooperative Bank, the other is Bombay Mercantile Bank, where people from the RBI have moved as advisors or as employees in these banks. We want accountability, we want that investigated, we want action. Okay? If independent directors are in publicly listed companies have such onerous responsibilities, how can RBI inspectors and supervisors get away? Surprisingly, we don't even ask for it. The third thing we want is some clear rules about bank licensing. Who gets a bank license? What should be the capital? What is the fit and proper criteria? If some bank is sinking, who are the possible people who can take it over? We do not want a situation like Indiabulls and Lakshmi Vilas Bank, where there is constant speculation, share prices going up and down, and after a long drawn out process, the RBI suddenly says, no, we won't allow it. What are the rules? Why aren't they clear? Why can't we know who, for instance, today, if we want somebody to take over PMC Bank, who are the kind of people that will qualify? Clearly, RBI says it's not about being money bags. So you may have a lot of money, you may want to take over a bank. It does not want large industry to be in banking because there are moral hazards. Okay, fine. But then who are the people with deep pockets who are fit and proper? Let there be some rules, some criteria which is not cast in stone. There can be some discretion on the part of RBI, but there have to be general guidelines about who would qualify. We also need to put in place a time-bound resolution process. We cannot have PMC Bank turn into a zombie. PMC Bank administrators have told people that the cost of keeping those 137 branches alive is 1 crore a day, which is over 300 crore a year. If it takes 4 or 5 years or even 2 years, look at the amount of deposits that are going to get sucked up in paying salaries, electricity, rent and maintenance. It can't happen. So you have to have a process, a time-bound resolution. In PMC Bank's case, we want people who understand not only banking, realty, how to do business. We do not want central bankers who have never run even a pawn shop to decide the fate of what is going to happen, because they have never worked to a deadline. They are slow and ponderous, and time is something we don't have on our hands. If you want to conserve that money, if you want to pay it back, depositors also have to insist that it has to be quick. Within 3 months, we need a solution, we need a sale, we need this ended. It can't go on for longer than that. So financial resolution process ultimately is going to be the key. Let's all demand it. Thank you so much.